Hello, welcome back to ICE 365 Live. I'm joined in the studio by H2 Gambling Capital's Industry for the Health Check, the Industry Health Check. I have got Ed Birkin, the Senior Consultant from H2 Gambling Capital, and Josh Hodgson, the Senior Associate. How are you both?
Yeah, really well, thanks.
Yeah, good to have you both in the studio. Nice to see you back again this year, Ed.
Yeah, it's great to be back. Nice to be back in February again, and still a lot's happened in the last 9 months since we last did it.
Yeah, absolutely. So new year, economic storm clouds are brewing. What's the outlook for 2023?
Yeah, we've definitely not been short of crises of late, but we are forecasting growth for 2023. So we're looking for the global industry to gain about 11% on 2022. So we've bounced back now from the COVID pandemic and the crisis, and yeah, going forward, we expect around $521 billion to be generated in 2023. So the real driver of that growth is online for sure. And I think online since 2019, just before the pandemic, was running at around sort of $62 billion a year. And that in the space of a few short years has now doubled. So in 2023, we're looking for 121 billion of gross win. So that growth has been absolutely astronomical, and it helped a lot by the push of lockdowns and things pushing people online, and that is a trend we see is going to continue going forward. So whilst there are definitely headwinds from the economy and things, it actually does sort of lend itself quite well to helping the online market grow, given when we do typically see recessions and economic hard times, whilst discretionary spend is less, people spend more in the home. So that really lends itself to online driving the growth going forward.
Now, we've obviously started the year with a big change in Macau now that China dropped its zero COVID policy. And whilst players are back, could issues with bringing money in and out hinder its recovery?
Yeah, absolutely. I mean, Macau's been taken the longest recovery of any market given the restrictions in China. I mean, last year was still down at around 15% of our pre-COVID expectations. Then suddenly you saw January where it's up at 60% of pre-COVID expectations. So we actually forecasting for this year to pretty much get back to our pre-COVID expectations. I suppose the two unknowns or headwinds potentially is the junkets, the VIP market. So 2019, you're looking at the mass market only being about 55% of the total market revenues, whereas now we're expected to be 85% just because the VIP junkets are so constricted. And then that goes into the money in and out. And if you start launching the central bank digital currency being tried there, where the Chinese government have more control over money flows, then that's something which they could effectively directly control what's happening in the market going forward. So it's definitely one to watch, and leads into the whole, will we see wholesale changes in digital currency really impacting the gambling market going forward?
And let's talk about the US market, because there's been discussion of a slowdown in the market over there, particularly in Las Vegas. Have you seen some indications of this so far?
So far, no. We've seen the opposite. Las Vegas had an incredibly strong year, and December had the highest gross win generated of any month so far. Just came in just under $1 billion for the month, which historically, compared to last December, that's up around 20%. So whilst we've not seen it yet, it's definitely something that we do see on the horizon. Because even looking at just some more generic macro indicators in the US, employment's historically low. Unemployment's historically low, around sort of 3%. And obviously with the Fed on a sort of tightening policy, we do expect that once that liquidity is really, felt, it's been taken from the market, and employment starts to rise as companies sort of close in the margins, then that's definitely something we could see affecting big destination markets like Vegas. So we are expecting those headwinds to start during the year. And we're looking for the market to contract about 8% in 2023, but that is coming off very high comps, so it's not quite as bad as it sounds, an 8% decline. So yeah, we'll definitely have to just keep an eye on how the macroeconomic data is coming in, and it's something we keep an eye on to make sure that the health of the consumer and discretionary spend where it's at, essentially. So yeah, it'll be definitely a very interesting year in the US. So there's definitely headwinds, but again, should be an opportunity for a lot of operators too.
So 8% potential decline there. Could that be offset by sports betting and iGaming?
Definitely think so for sports.
Yeah, I mean, look, I think the one thing that's surprised a little bit is that iGaming hasn't had a foothold in as many markets as we thought. The way iGaming is growing, though, in the existing markets, even ones that are 2 or 3 years old, it still continues to grow very strongly, and we expect that to happen. There is an argument about how much is cannibalizing the land-based casino spend in those markets, like Michigan, New Jersey. I think it's been pretty proven that those markets haven't recovered, the retail casino spend hasn't recovered as quickly as ones that don't have iGaming, so there is some form of cannibalization, but it's definitely growing the overall market significantly. So we don't expect many new states to come online in 2023. I don't think we've got any iGaming states. There's a couple of sports betting states. Massachusetts is just launching. But we are expecting to still see some same state growth that will offset the retail declines. The question that we've got, and we've just done this US white paper that's looked at it in quite a lot of detail, is how much of that's free bets and bonuses, because as investors start asking operators to look towards profitability, they're going to start reducing some of their free bets, bonuses, and a large portion of the gross win is free bets. So about 40% of the sports betting revenues that are reported is free bets. So then actually what they take home as their revenues is only 60% of the top line. So if that starts contracting too quickly, it's going to make the overall market look smaller, or at least a slowdown in growth, despite the fact that for the operators take home net revenue is probably going to be growing quicker.
And what about Europe? Do we see any growth taking place this year, do we think?
I think Europe's definitely an interesting one to look at, and I think really to get a good sense of it, you're going to have to look at it on a market-by-market basis, because obviously, being a much more mature region than the US, as we were talking about, there's a lot of regulatory headwinds for markets like the UK with the white paper. You've got Belgium with advertising bans coming in the middle part of the year. But then also you have markets that have changed regulatory status recently, like Germany and the Netherlands, where you could see significant growth from those markets going forward. So I think in a region as a whole, we're looking for Europe to grow about 6%. But then you're just looking at onshore market in Germany, the online market is many multiples of that at maybe like 35% growth. So yeah, it's definitely an interesting one that I think looking at a region as a whole is not going to give you the full picture. Really, you have to look on a market-by-market basis. For example, looking at Finland as well, recently proposed to change the monopoly there into a commercial market. So there's always opportunities, even when the macroeconomic forecast doesn't look quite as rosy as we would like.
And what about scope for growth? So there's been a lot of talk about Latin America and Africa. Could these regions become key players over the forthcoming year?
Yeah, absolutely. We've had a lot of interest last year in Latin America. We get interest in Africa as well. It can be a bit more niche. The data on Africa is much harder to come by, so we do our best, but we will, we'll put our hands up and say, a lot of it is estimates. In fact, someone from Africa once said to me, everyone has bad data in Africa. Yours isn't right, but it's better than anyone else's, which I kind of took as a compliment. But Latin America, look, everyone was really excited about the prospect of Brazil opening up. We estimate the offshore market's about 1.2 billion euros for online gaming and sports, and we get it to over 2 billion euros when it opened up. The law got passed, it wasn't signed into law, there's been presidential change. People are still hopeful, but it looks as though it could start going towards a state-by-state basis rather than federally, a bit like Argentina, and that would be, it would be far from ideal for the market potential. So it's not looking as good for Brazil, but we're hopeful, albeit maybe optimistically so. Then you look at others, Peru, for example, we think they've passed a law to open it up. That's going to be a €500 million market. It may not seem much compared to places like the UK, but it's an opportunity to get in early. There are there's Betson, there's Bet365, there's Intralot, there's a couple of players there, but there's really opportunities to get into what is a meaningful market and grow it from there. So I think Latin America is one where we've talked about some of the potential for a number of years. It's starting to come through, and it's going to be interesting to see which operators go there with their global brand. I think they're the right ones, or whether you take a local hero approach and maybe acquire a small local brand. And you've seen the likes of Colombia, they're the operators that have done well in these regulated markets, Caliente in Mexico, as the local brands. And I think we're seeing some of the big operators, I think, will look to acquire some local heroes and really take advantage of the growth in Latin America as more developed markets are starting to slow down or get more regulatory headwinds.
Fantastic. So it's the beginning of day one at ICE London. What are you going to do first? Obviously, you've done your interview, but what's the next move?
I think definitely go and check out some of the stands and just get a sense of how the market and the industry as a whole has bounced back. Obviously it came last year and wasn't quite as much floor space taken up as it used to be, and now just seeing it as we walked in this morning, it's back to full size. And just been speaking to a few people who've pointed out some stuff I've got to go and look at. Apparently the Novomatic stand now controls about half of the space up the north end, so I'm definitely going to go check that out.
Fantastic.
Well, I'm going to be sat just the other side of the glass watching these great ICE 365 interviews, so...
Great answer. Thank you so much for joining us in the studio. We hope you have a great year.
Thank you very much for having us.
So up next we have a gaming investment feature for 2023. Join us shortly. We'll see you then.